But first, I'm joined by two experts on matters of home finance. Mortgage consultant Nick Fendig. Welcome, Nick.
Hi.
And certified real estate lawyer Zachary Roth. Thanks for being here.
Yeah, good morning.
And to our listeners, have you seen your mortgage payments soar? And are you worried about being able to keep up costs with your increasing escrow? We want to hear from you. Give us a call at 904-549-2937. You can also email us at firstcoastconnect@wjct.org or message us on Facebook, Instagram, or tag us on X. Nick Fendig, as a loan originator, it's your job to help people get mortgages that they can afford. What are people finding now that some of their monthly payments are out of control? What's happening?
It's really, just like you said, kind of a sticker shock. When I got into the industry back in 17, we would estimate monthly payments for insurance about $75 a month, give or take, And now that's really kind of, we budget for about 180, give or take, monthly. And the reason being that's happened, unbeknownst to a majority of us, is back in 17, the Florida Supreme Court passed a bill that just made it extremely profitable for attorneys to provide, fight and litigate insurance claims. Insurance has always been an issue in Florida. We have a lot of storms and things that other states don't have. But the money that came in back in 17, it shifted to what's caused the issue, and it trickled down to the rest of the homeowners.
So a lot of people, when they go into a home buying process, they seek something called a fixed mortgage with the expectation that they're going to have predictable, similar payments month to month. But that doesn't protect you from the kind of cost increases that people are seeing in their escrow needs.
No, that's a good point. When we help qualify somebody, is helping set expectations and talk about that. Things that happen afterwards, and those really, like you said, the escrow, those are things outside of control, and those numbers keep changing rapidly. And so it's very hard right now for anybody trying to buy a home or keep their home to know what that's going to look like.
And so when you're advising someone that's coming to you looking for a mortgage, what do you tell them about expectations going forward in terms of the affordability of their mortgage?
Really, it is just setting proper expectations and having that consultative approach of asking someone, what do you want your payment range to be, and then going from there. If it's a first-time buyer, what their rent has been, what their comfort level is, what their pain points are in that range, and trying your best to give that expectations. And then when it comes to what homes they're looking at, and asking those hard questions of what's the roof's age, these are other things you're going to need to consider down the road, and really trying to help guide every aspect.
Zachary Roth, as a real estate lawyer, you have some professional knowledge of what's happening, but you also have some personal experience. Explain what you've seen.
Yeah, so there's really two factors that play into this increase in escrows that people are receiving. And one is the insurance, like was just mentioned. Homestead is another major part. My personal mortgage went up about $1,200 a month because of Homestead mainly jumping up from the prior owner to my Homestead, reassessment of the value. So that's a combination thing that can kind of really hit people hard, because when you first purchase it, you plan on your monthly payments being X, as we discussed. And then when your Homestead kicks in, typically the following year, it's probably going to jump way up because of the reassessment if it's been previously homesteaded. And then on top of that, you have the year-to-year increases that we're seeing with insurance. And so in the past, maybe it was a one-time jump that you would get with that reassessment of homestead, but now you have the big jump and then the constant jumps on top of it. So it's a really kind of a double whammy almost on people.
And for people who have an expectation of what their mortgage is going to be this year, next year, years to come, it really has become a lot less of a certain thing.
Absolutely. Especially with insurance, with homestead, and property taxes, there's ways you can kind of guess where it's going to be. They use certain analyses to determine what market value is going to be, what the assessed value will be. So you can maybe back into that a little bit to at least give you a ballpark. But with insurance, it's completely unpredictable. So there's no way sitting here on February 6th that I can know next year what that invoice is going to be when it comes in. Especially because if we have a storm this fall, for example, it could completely change what rates are in our area.
We've got a call. Mark, good morning. Welcome to First Coast Connect.
Good morning. Thank you all. I had Progressive Insurance. Live in Mandarin. My assessed value is about 250, market value about 320,000. My premium went from $2,500 to $6,061 with literally a 10-day notice. And now, fortunately, after going through multiple denials, I'm now with Citizens at $3,051 premium. This is, of course, concerning. I feel like I and many other homeowners in Florida have no recourse. Even when we get inspections and 4 points that say, hey, this roof is good for 6 more years, the insurance companies have this ability legally after 10 years, I believe, to require certain things or put burdens onto homeowners. Two other things. This is happening under A.G. Moody's watch. She's planning on running for governor. If the worst kept secret, she's going to run. And this has happened on her watch, and we need to hold her accountable. Additionally, I think that this begs for a look for city council and other cities to look at why are we burdening homeowners with basically the taxes. The number one way for government to get their money is through millage rates and also through the school board. And that's putting the burden of basically fund our infrastructure and funding services to the city on homeowners. Thank you.
Thanks, Mark. So this Citizens Property Insurance was meant to be, the insurer of last resort, meaning that it was supposed to be priced higher than the market value because they didn't want to be in the business of subsidizing people's insurance. But that's changed right now. People are finding that the insurance company that the state provides, Citizens, is actually often cheaper. He said about half as much as his insurance rate was.
I have clients all the time. In purchasing, once they're under contract, they start with Citizens. They don't end with Citizens. They start with them. I know as a homeowner myself, Citizens been trying to get rid of us, and I'm just like that gentleman. My roof's got 15 years on it. It was a perfectly done rehabbed home, and Citizens can't get rid of us. We've done nothing wrong. Everything's been updated in the home. So yeah, it is a bit of a mess.
What does it look like when you say they're trying to get rid of you?
Citizens has the ability to, if another insurer can take on the burden, if it's in a certain cost transfer, and everybody else wants to charge way too much that we kind of can't end up. The last bill we saw was about $2,000 or $3,000 more a year. So, we've kind of ended up with Citizens like a lot of the state.
We're talking about rising costs of home mortgages, and we're taking your questions. You can call us at 904-549-2937. You can also reach out on social media, or you can email firstcoastconnect@wjct.org. Zach, as a attorney that handles real estate, there are a lot of claims now about, attorneys having a role in, litigation that's raising the cost of people's insurance. And there's been a lot of, legislative initiatives to try to dial that back. How would you assess the status of that right now? And is that something that you believe is a primary contributor?
I think it definitely is a primary contributor. I believe I read something last year that said 15% of all insurance claims nationwide are in Florida. 70% of all insurance lawsuits are in the state of Florida, which is a crazy disparity, which shows that there's some incentive for those lawsuits to happen. I know there was some efforts made last year and the year before to kind of rein in assignment of benefits and other concepts that give rise to those, that create incentives for cases like that to move forward. But what I don't see and haven't seen yet is a real initiative on the insurance side. You see the activity on the litigation side trying to limit the litigation, but what you don't see are regulations on the insurance and the rates and the increases and that kind of stuff. And that's what I would hope to see more of, too, is to attack it from both sides to help give the citizens of the state some relief. When I started doing closings, 8 years ago or whatever it was, maybe we saw Citizens every now and then. Now I would say that more than half of our closings, Citizens is the insurer, because the private insurance is just so expensive.
So the cost of insurance is obviously going up in part because of storms, the intensity of storms in Florida. FEMA redid its flood maps in 2022, and that put a lot of people who previously didn't need flood insurance or weren't in a quote unquote flood zone. Now they have to have that insurance. And it's my understanding that some people aren't even contacted. Like the mortgage holder, whatever bank that is, just purchases the flood insurance and doesn't really shop around necessarily for the client. So they get hit with a bill that they didn't really even know was coming.
No, I've heard it happening. Yeah, and it is something that a lender can do. Same as if insurance gets dropped, the lender themselves will put forced coverage. And again, same thing is it's not getting shopped, and it can be quite expensive to the homeowner.
We got a comment from Brittany on Facebook. She says, we purchased an older mobile home and land in Putnam County after being priced out of Clay County. Our mortgage jumped from $850 upon purchase to $1,100 from 2021 till now. We didn't take it into account, and now we're pinching pennies. Talk a little bit, if you can, Zachary, about how people can anticipate, even though these costs seem somewhat out of the realm of imagination.
Well, in terms of the insurance, I think the best you could do is to just plan on it going up and build in, for budgetary purposes, some expectation that each year it's going to go up by some percentage. You could probably speak to insurance agents who can tell you how much they've seen them going up, so you can kind of get an idea how much to budget. On the taxes side, that's a little bit easier because what's going to happen is Homestead applies as of January 1st of every year. So if you purchase in February and your seller had Homestead, you're going to have the benefit of that seller's Homestead through the rest of that year. So if it was this year, through the rest of 2024. Where you're going to have the reassessment is in 2025, whenever it's your taxes. You can use what you paid for it, and I would say back out about 20% of what you paid for it, and that's probably a pretty good predictor of where you're going to be in terms of your assessed value when it's reassessed. And then from there, you can calculate the difference in the taxes based on what they were paying as the taxable value versus what you'll be paying as the taxable value, and get an idea of what that jump is going to be, again, so you can pre-budget for that. Because you can do that math at least generally now, and you won't have that payment until next year.
And so not everybody knows necessarily, what homesteading is, but basically that is a claim that you can make that you're going to occupy the property as your primary residence. And it gives you a couple of benefits. Why don't you just tell us briefly what those benefits are in terms of tax savings?
Absolutely. So Homestead is the most powerful thing in real estate in Florida for homeowners. It's a huge protection. There's other benefits beyond the taxes, but for these purposes, there are three really large tax benefits. One is that the first $25,000 of assessed value is gone, is automatically free. And then once you get $50,000 in assessed value, the next $25,000 is also gone. So for example, if a home is assessed at $75,000, it will actually only be taxed at $25,000 because you'll get that $50,000 discount. If it's assessed at $250,000, you only pay $200,000 worth of taxes. That's one major benefit. Another is that your increases in your taxes are capped at 3%. When I say increases in taxes, the assessed value. If the government entities raise the millage rate, that could increase it more, but the assessed value can only go up 3%. So if it's assessed at $100,000 in year one, it can only be assessed at $103,000 in year two, even if the appraiser says it's worth $150,000. So that's a major benefit. And then a third benefit is what's called portability, which is the ability to carry that protection that you've accrued in your existing home over to a new home. So say you buy it for $100,000, and after 5 years you're at $115,000 because of the 3% cap, but the actual value is $200,000. Well, now you've built up an $85,000 portability benefit that you can carry over to your next home. So say you buy another home for $200,000, you carry that $85,000 over, and you get your $50,000. So now you have $135,000 in discounts off your assessed value.
Significant. We've got a call, Max from Jacksonville. Good morning. Welcome to First Coast Connect.
Good morning. My neighbor had an increase in his homeowner's insurance, and his agent told him to get a home inspection, and they did that. The home inspection was favorable, so they sent that to the insurance company to challenge the increase, and they were able to get their homeowner's insurance reduced significantly. And I wonder if all insurance companies do that? And if your panel there can speak to that topic, and I'll get off the line. Thank you.
Thanks, Max. Is that something you're familiar with?
I know as a homeowner, we had to get home inspection, and yeah, that is something you can do. It's just like anything in life, you can always shop your insurance. Once your escrows are reassessed, I check in with my clients yearly, ask if they have seen any increase, absolutely advise them to shop. Yes, it might include paying for a home inspection, wind mitigation checks, all of those things. But again, if it can help you save the money, it'll pay for itself.
And about how much does a home inspection cost?
Last I've seen is anywhere from 150 to 250, depending on the size of the home.
So it could be well worth it.
Yeah.
We've got a call. Alex, I think he wants to talk about something that you raised a moment ago, Zach. Good morning, Alex.
Yes, good morning. I just wanted to bring up, you talked about wanting to regulate the insurance carriers more, just to reel in those increases. But my concern is in Florida, we've seen so many insurance carriers go belly up because they've not been able to make it or become profitable. And if we keep throttling them, then we're just going to have more carriers go away and more policies go to the insurance carrier of last resort, Citizens. So going back to that legislation that incentivized attorneys' fees, is there anything going on there more? Because I think that's really the root cause. Thank you.
Zachary, in terms of regulations, I mean, you were saying, you'd like to see more regulation on the insurance side. Is there something in particular? And to Alex's point, I mean, we are already seeing this huge exodus of insurance companies either limiting new policies or leaving the state altogether, determining it's too high of a risk.
I don't think the idea of just setting caps is really workable because of what he just mentioned. I think going back to Max's point about the idea of the inspection reducing the ultimate rate, I think it's building in more ways of the public to understand why their rate is what it is and tying it to these different factors in the home, inspections of home. If you have, a new roof, how that's going to impact it. I think that's where you have to attack it, is creating more transparency in why the rates are what they are, because it seems like, based on Max's call, if you have a new inspection and then all of a sudden the rate changes, the owner probably didn't understand what they could have maybe done on the front end to repair the home to reduce that rate initially. I think that's really where it is. Now, I'm not a legislator, so I, am not here to put it on paper what it is, but I think a more workable solution is having an understanding of what reduces rates, what increases rates, and having some sort of guidance there to help homeowners understand and take proactive steps to protect themselves.
The reality, though, in some ways, is that the challenge is perhaps so great in terms of flood risk, storm damage risk. We're seeing even reinsurance companies, getting out of the insurance business in Florida, just having assessed it as, too vulnerable to sea level rise. So is there a real, transparency is great in terms of, understanding what you can do. But if there really is nothing you can do, it may be hard for an insurance company to offer a way into lowering those rates.
Yeah, I think it's important that we don't stop attacking it from the one side of, are there things that are happening in various industries? And I'm not going to place all the blame on attorneys. It's easy for an attorney to say, but I think there are contractors out there that are taking advantage of the law, that are really putting owners in situations where they don't have a choice but to file litigation. They may come and say, hey, we can get you a new roof from your insurer. It's not going to cost you anything. Why don't you let us put a new roof on? They put a new roof on and the insurer denies the claim. Well, now the owner ends up with a construction lien from the contractor, says, well, you're going to pay me either way. I gave you a new roof. The owner doesn't really have a choice but to chase the insurance money now because they thought they were getting a roof covered by insurance and they're being told they're not. So I think that's a thing that we could also analyze is more regulation on that side to prevent that. I think there are other outside the box ways of doing it. For example, especially you mentioned flood insurance. Neptune Beach recently adopted some new ordinances that resulted in it increasing its flood rating with FEMA, and citywide flood insurance rates are going to go down because of ordinances that the government passed. So there may also be ways of local governments working with FEMA, working with the state to find, are there changes to ordinances things like that that will also help reduce rates.
What is the deal with roofs? I mean, that is kind of the one thing that you always hear. People are being required to put on new roofs. They won't be insurable if they don't put on a new roof. But then there was kind of this whole, door-to-door scam where people were like, we can get you a free roof. Don't worry about it. And so everybody's got new roofs and the costs have just been skyrocketing. Was that the change that you were talking about in 2017 that kind of opened the door for some of these rates to rise?
Not necessarily. In 17, the Supreme Court, Florida Supreme Court passed a bill basically allowing the fees of litigation to increase dramatically. In terms of roofs, that's just something policy, insurance is there for. You can file a claim if there's been quote unquote damage. And so, while we wouldn't call it hail like we know in other states, but we have hailstorms. Well, that counts as damage, and that can file a claim. And so, yeah, that has been a common tactic that I've heard of over the years by roofers but they're just using the system as is.
We've got a call, AJ from Arlington. Good morning, AJ. Welcome to First Coast Connect.
Good morning. My question is, I'm a homeowner, but some of my friends that are homeowners have said they can't afford private insurance, so they have went to lender-placed insurance. Could you maybe tell the listeners the difference between lender-placed and regular insurance?
Lender-placed insurance?
So the lender place is, just like anything, is that they can force coverage. That's the first I've heard that people can't afford the current private market insurance, and so that for the lender's own placed insurance is cheaper.
Explain what that is, though. I'm not sure I understand what lender's place insurance even is.
So the lender just essentially has their own insurance that they can force coverage on. So one thing that we would see sometimes, or I would hear, is that client goes and purchases a home, closes escrow. Well, they did their 4-point inspection, they did everything, and then a month or two later, all of a sudden, their insurance carrier gets dropped. And unbeknownst, and it's kind of a crazy thing to learn, is the insurance companies themselves really do their due diligence post-close. So they'll see essentially their home inspector go out, sometimes jump on a ladder, but if they can tell it from street side, they'll do their inspection, send it, and the insurance carrier will drop it. And so then the lender, to protect the collateral, because that is a responsibility of the homeowner as well, if the documents they sign is that they'll keep insurance to protect it, the lender will then go and get policy and force it on.
And is that a higher cost insurance?
Typically, yes. And now the homeowner, even in that situation, can still go get use a home inspection and go shop it privately. But that may require, if it was dropped, say for the roof, that means they would have to go and get the roof replaced. And now they don't have insurance to file a claim, and so it creates a very dangerous cycle.
We've got a call, Naomi from Jacksonville. Welcome to the program. Thanks, Naomi. You there, Naomi?
Oh, hi. Yeah, I'm here. Hi. My question is about condominiums. It sounded like you said earlier it's the homeowner's responsibility to shop insurance prices and to find out on the front end what could be done to lower the cost or make sure that anything that might lower the cost is done, and then have an inspection. But where there's a property management company involved, isn't it their responsibility to shop it and find out what could be done? So that, in our case, it's 56 different owners. So you don't want us all shopping and individually. Doesn't the property management have an obligation? Thanks.
Good question. Thanks. Zach, what is the situation when it's a property management?
Yeah, so condominiums are an entirely different animal because of the way they're regulated by statute. There are very specific insurance requirements in Florida law, Chapter 718, that require insurers to carry, or the condominium association to carry that. Now, a condominium association is nothing but the collection of the members, the individual unit owners, but it's managed by a board of directors made up of those unit owners. And so most of the onus in that situation falls on that board of directors, who often then delegate that authority day to day to property managers. And so in terms of how you make sure that property manager is shopping rates, doing what they're doing, that's really oversight from the board of directors is the most important aspect of that is making sure that you don't have passive board members. You have active board members. They don't have to be overly active, but not just taking the word of the property management company. If you have concerns, if the property management company's been doing a great job, there's no reason to go dig and try to create a fight that's not there. But the role of the board of directors is to ensure that those things are happening, ensure with an E, that those things are happening, including the insurance, because it is so critical, because a condominium is nothing more than a box of air. So really all the building, the structure, the roof, that's all the association's responsibility. So that insurance really is critical in those scenarios.
We've got an email from Jay saying, my homeowner's insurance premium has increased 60% every year for the past 4 years. I'm looking for a second job now because if the trend continues, it will be up to $10,000 this year. I have not made any claims, and the insurance carrier reported profits of almost $300 million to their investors last year. I would love any suggestions. I'm drowning.
First and foremost is, have you done a home inspection? What are the issues? 90% of the time it can be tracked to roof, AC age, hot water heater. Those are the three biggies for homeowners. Another thing too with insurance is there is obviously everyone has a fear of filing a claim and losing insurance. But when an insurer goes to, write a policy, it's not just the individual themselves they're evaluating, but also the neighborhood itself. What's the claim history in that area? So
interesting.
it's the neighbors as well, and that history. I mean, if there's, for example, if you were in Fort Lauderdale where there was, tornado damage or hurricane damage, that there's a history there, the insurer knows and can track. But any homeowner where they're seeing rises, it can be really worth it because then you can go and shop it. Then you have proof of what's going on.
And Zachary, I just wanted to ask you, because we're talking about insurance, you also mentioned the issue with taxes. And, especially when you're buying a home that's been homesteaded for a long, long time, when you purchase it, and then you're going to see those rates jump, at least initially, until you can establish your own homestead, capping those increases. But how do you tell people to prepare for that and to be aware of that when they're buying a home? Should they be looking at homes that were more recently sold, or is the taxable value still going to benefit you because it was capped way, way back?
So the cap from the seller is not going to benefit you at all. In fact, it's going to exacerbate the problem, because if they haven't had a cap for a long time or they don't have a cap at all, your proration at closing and then the escrow amount that you're going to establish initially is going to be fairly accurate. Where you really have these massive jumps in the taxes is when you've had a property homesteaded for a long time. People may say, how am I supposed to know whether they've had it homesteaded for a long time or not? Florida actually is relatively unique in that we have so much documentation available online with our property appraisers. You can go back, Duval County, St. Johns County, Clay County, they all have this. You can go back and see the sales history, and you can see when that seller purchased the property. You can find the deed if you really want to look at it. It'll tell you how long they've lived in it. It'll tell you what exemptions they have on it for tax purposes. It can tell you what the just market value is and what the assessed value is. So if you look at a property, you're interested in it, you pull it up and you see that it has a just market value of $600,000 and an assessed value of $150,000. Well, now you know when you buy it, it's probably going to jump way up because they're not going to change that just market value down. It's probably going to go up because chances are the purchase price you're going to pay is probably actually more than the just market value that the property appraiser puts on the property. So that's a very good way. In Duval County, that's right at the top under the name. It's a really easy way to look it up very quickly, and you can search by property address.
Yeah, you can just plug in the address of the property that you're interested in. Well, there's so much to talk about on this topic, and we really appreciate both of you being here to help us break some of it down. I'm sure we'll be talking about it again. I've been speaking with mortgage consultant Nick Fendig and real estate attorney Zachary Roth. Thank you both so much for being here.
Thank you.